Welcome to our Venturing Ahead Trends for VC Investing in 2022 event, the first in our Deal Makers 2022 series. I'm Dan Primack, business editor of Axios, coming to you from my house in Massachusetts. Big welcome to our audiences on Facebook and LinkedIn and YouTube and Twitter, and of course, Axios.com. And if you are following along on Twitter, please use @Axios and the hashtag Axios Events. Over the next 30 minutes, I'll be joined by my Axios colleague, Kia Kokalitcheva, and we'll examine the trends that are shaping venture capital this year and a closer look at two particular industries, climate tech and crypto, that are really driving deal activity. Our first guest is the CEO of Elemental Accelerator and the founding partner of Earthshot Ventures, Dawn Lippert, joining us from Honolulu, Hawaii. Hey, Dawn.
Hi, how are you?
Good. So, Dawn, the news right now, all the news right now is about what's happening in Ukraine with Russia. And a big piece of that is energy and energy prices and energy independence. What does this moment mean for climate tech and climate tech investors?
Well, climate tech investing has really been accelerating over the last year. We saw, a doubling of investment in climate tech innovation last year and even accelerating more in 2022. And so investors are already moving into climate. They're sort of seeing, hey, I have kids now. This is something that I care a lot about if I want to leave them a planet that's inhabitable, a place where we can live. And so investors are already coming into this space. They're starting to see really strong returns. We're starting to see climate unicorns popping up almost every week. And I think what this moment means is just a new realization that it's not just, this huge economic opportunity, but it's really a national security issue. And the issue is urgent in every way. The good news is that climate innovation, clean technology, it's cheaper now, it's cleaner, and it's safer from a national security perspective. So all the stars are aligned in a way that is really unique and that investors are paying attention to.
I'm wondering, does it matter? There's been so much talk over the last couple of weeks about how what's happening could could accelerate energy transition, particularly in Europe, but in the United States as well. On the other hand, when you've got rising oil prices, which means rising gas prices, there's generally a feeling that oil companies should drill more. That's what they usually do in response to this. If oil companies do start drilling more, does that have any impact from your perspective on that increase in climate tech investing you were talking about?
I don't think that increased drilling has any dampening effect on climate innovation. I mean, these are driven by a macro change that's going to happen. The transformation to clean energy, to net zero, is going to be bigger than any other economic change since the Industrial Revolution. So each of these sort of short-term changes in drilling and in oil markets, hugely disruptive, economically, but it doesn't change the macro picture of where we're going with climate. It also doesn't change what's happening in technology and sort of the convergence we're seeing in technology and talent coming into the space with really effective talent and business models that make a ton of sense. So energy is one piece of the picture in climate innovation. We also see a huge amount of innovation in mobility, in materials and circular economy, and all these other sort of macro industries because climate touches everything. So oil is one piece of it, and what's happening in energy markets is a huge piece of it, but this is much broader than that.
When you talk about those different segments, the old Mark Andreessen line that software has eaten the world. Has software also eaten climate tech?
Yes. I mean, software and hardware have to go hand in hand in climate tech. What we're seeing as climate investors, and we've been in this space now for over a dozen years, is that hardware and software really have to go hand in hand. It's the digitization of some of our biggest and sort of most intractable industries: energy, transportation, water, materials, food and agriculture. So there's hardware innovations, and there are also many times that hardware has a brain, which is the software side of things too. And what's been really exciting as a climate investor is that we're seeing talent come in from the software side, from artificial intelligence, machine learning, all these different kinds of disciplines, applying that to climate and coming up with fascinating companies that are really investable and will be really big.
Within climate tech is a big sector in terms of, you referenced, everything from mobility to, say, carbon capture. There's a lot of pieces of it. Within climate tech, give me a kind of a niche or a segment that you're particularly interested in right now.
Yeah, I mean, I think all of these segments are pretty interesting from both the deployment and innovation standpoint. One segment I'm really interested in right now is around circular economy. Folks don't realize necessarily that about 10% of our global emissions come from fashion and clothing and sort of those materials. So we're seeing some really interesting businesses, companies like Trove that recycle and upsell brands clothing that brands are signing on to because they realize that they can actually make money again from the same articles of clothing. Or companies like Thrilling that are bringing the digital world to secondhand stores and digitizing the marketplaces and inventory of secondhand stores. So that digital connection that you're talking about. So I think this whole idea of circular economy around materials, around reuse, is going to be huge from a climate and emission standpoint, and we're just getting started.
Then I'm going to ask you the converse. Is there an area that you've seen a bunch of money going into that you're not that excited about right now, or that you're not putting money toward right now?
I would say not necessarily we're not excited about, but I think something that we are investing in now, but I think will take a little bit longer to come to fruition than we've necessarily seen is carbon removal that's really price competitive right now. We're seeing amazing carbon removal technologies, whether it's putting carbon into existing materials or building materials or just taking it directly out of the air through direct air capture. But it's going to be some time before those technologies are really cost competitive. And the good news, we have companies and corporates that are stepping up now to buy those carbon credits, companies like Microsoft and Stripe and others, and really take a lead in the carbon markets. But I think it's going to take longer to get to price competitiveness than we necessarily are planning for.
I wonder that from a venture investing perspective, then, do you view some of those investments kind of like maybe what we saw in terms of kind of solar cell manufacturing back 10 years ago, which was kind of that first clean or green energy VC boom that didn't work out well, in part because the technologies just didn't scale yet and weren't quite ready for prime time from a price perspective?
I think we learned a lot from that time. One of the things that we've learned is that we have to be really thoughtful about the kind of capital we bring in. So those kind of business models actually can work really well for venture investments when blended with other kinds of capital as well. So whether it's debt or project finance or government support or other kinds of capital. So I think there's still really interesting venture businesses. I think it just needs to be blended really thoughtfully. And the venture community understands this as well. I mean, one thing that feels so different in the last year or two is the number of traditional tech investors coming into climate that previously were not willing to invest in climate. And they're calling out people who've been investing in this space for a long time and saying, we want to invest alongside you. We want to bring in expertise from people who've been already investing in climate, already thinking about how to blend these kinds of finance to preserve venture returns. And so I think it's actually possible to keep investing in really hard things and just be really thoughtful about how we blend that together and bringing complementary expertise to the table to help companies scale hard things.
Speaking of complementary expertise, there seems to be a little bit of a fissure within the climate tech venture community in terms of kind of particularly the big oil majors, but also other traditional legacy energy companies participating in venture rounds as venture investors in climate tech, green tech companies. Which side of that line do you fall on? Is it a good thing? All money in the door is good money? Or is it, wait, you guys helped create this problem that you're now putting a little bit of money to help solve?
I would say we're more in the first camp. All money and expertise in the door is good. I think there's actually a lot of people within these companies that want to be on the right side of history, want to do the right thing when it comes to climate innovation. It is still a huge uphill battle, and their business models are not aligned with a decarbonized future yet. But I think there's a lot of expertise, and we've started to see some real glimmers of hope. We've had a couple of oil majors acquire companies in the elemental portfolio and invest in a number of companies in the elemental portfolio and be really pretty good partners in helping scale those companies. So I think more is better. We want them at the table. And the other thing that's really interesting is that when these oil majors are acquiring companies, if they're big enough and if they're interesting enough high growth companies, those CEOs and those leadership teams who are many times driven largely by climate and impact are gaining influence in the C-suites and sort of in these other venues and pretty insular companies. And I think that can be pretty influential as time goes on. And we just don't have a lot of time to waste. So I think we need every single tool.
If you had a golden ticket in Washington, D.C. and could just propose a law and get it passed, just you alone, what's the one thing you would like to see? What's the one thing you would do in D.C. in terms of improving the environment for climate tech?
It's a great question. I think I would say make the government be the number one buyer of everything low carbon and everything sort of climate innovation. Our government actually buys a huge amount of concrete, steel, buildings, vehicles, leasing things, right? We saw this with sort of the post office and what's going to happen with this giant fleet of post office trucks. I think given the sort of opportunity to bring the government in as a commercial customer at scale is actually really huge and something really underutilized in this country and can kickstart a lot of different innovations.
Dawn, last question for you. I have seen you in another interview recently talk about wildfire technology. Give me an example. What can startups do to prevent wildfires?
Well, that one's interesting. We've seen a lot of various innovations in that in the last couple of years. And I think it's because people are seeing wildfires and experiencing them in their backyards. One innovation that is important around wildfires is actually just mapping where are they, what can we do about them, what's happening in our forests. And so we have a company in our portfolio that does exactly that. I think, information is one piece around the wildfire crisis, but there are lots of interesting technologies in soils, in observation, and rapid response that I think will come to fruition and commercialization in the next few years. And this is incredibly important for communities. I mean, communities and residents are hugely impacted by wildfires. And so it's something we see as a real community and equity issue.
Dawn Lippert, thank you so much for joining us.
Thanks so much for having me.
And next, we have a view from the top segment with my Axios colleague, Chief Business Officer Fabricio Drummond.
Thank you, Dan. I'm Fabricio Drummond, Axios Chief Business Officer. Thank you for our sponsor, Cooley, for making this conversation possible. I now have the pleasure of hosting a conversation with Peter Warner, partner and co-chair of Global Emerging Companies and Venture Capital Practice Group at Cooley. Peter, welcome to Axios.
Thanks, Fabricio. Great to be here.
Thanks for joining us. Peter, 2021 was a year where we saw record-breaking transactions, valuations. VC alone invested $330 billion. What are the trends that you're seeing in 2022 with VC investment activity, and how does it compare to last year?
Yeah, thanks. 2021 was amazing in terms of valuations and amounts raised at all levels, levels of growth in our company base. And 2022 it started off at a modestly less frenzied pace, but still a great environment for companies at all stages to be raising capital. Because of what 2021 looked like, we had lots of clients that now have raised lots of money, more than they might have even planned on raising. And so they're somewhat resilient at this point and don't need to be worried about somewhat choppy financing markets. But even for companies that are looking to raise money, it is still a great environment. I'd say it's probably 15% less frenzied than it was in Q4 of 2021, which still means historically fantastic for a company looking to raise money. It also is coupled, though, with a little bit more volatility. Obviously, there are lots of things happening around the world that have some effect on the financing markets, particularly for late-stage companies. So we're in some ways replacing some of the investor demand frenzy with a little bit of uncertainty associated with macroeconomics that are leading to a little bit of nervousness around deal making, people pushing to get financings done quickly. Overall, though, still a great time from a company perspective to limit dilution and raise new money.
Excellent. We're also seeing a lot of investment activity in the crypto blockchain space, lots happening with Web3. What other trends do you think we'll see this year for these spaces and beyond?
Yeah, it's a great question. This is one of the most exciting things that we're seeing in 2022. Obviously, it started before now, but there are so many people, so many smart people who I respect, who are making big bets on the fact that Web3 is to 2022 as the internet was to the late 90s. And that has resulted in a massive amount of activity in the space. We are certainly staffing up to help our investor and company clients that are increasingly pursuing Web3 based strategies and companies. It'll be fascinating to see what happens, but I'm optimistic about it, as are many of my colleagues.
And as it relates to other emerging markets or industries, are there other markets or industries that VC investors should be paying attention to?
Yeah, I mean, we see all sorts of different industries have great opportunities to raise capital. I do think that one thing that we're seeing around Web3, which is a little different from most, is there's almost spawning sub-industries and markets as there is lots of testing being done to determine the applicability of Web3 technologies to very significant, large existing markets. So ask me at the end of 2022, and I'll tell you about the new industries and markets that have been created. It's almost like seeing how NFTs, which hard to call NFTs their own industry, but a very significant amount of activity around that, and that has spawned out of blockchain technologies. There'll be more of those throughout 22 and beyond for sure.
Excellent. While switching gears now to ESG, it continues to be a driving force in the investment markets. You were involved last year with Allbirds through formation and with the public offering as a PBC. What perspective and advice can you share with companies and investors who are considering adopting ESG at earlier stages in their life cycle?
Yeah, this is a really interesting one and something I spend a lot of time on personally. 2021 was an incredibly important year for companies that are ESG focused and private companies that are formed as public benefit corporations. Before 2021, there was one or maybe two public benefit corporation. Now there are a dozen or more, including a couple of public corporations that converted to public benefit corporations during the year. And that has really had a trickle-down effect and has disarmed concerns that a investment in a private company that's a PBC or anything but a regular C Corp is like investing in a nonprofit. And as a result, it's emboldening lots of early stage companies and founders to form as public benefit corporations, to do everything they can to put stakeholder capitalism at the core of what they do, to be very mission focused and focused on social impact in a way that is very genuine and enables them to articulate to their employees and customers and vendors how important it is to them. It's a great match for the employees that walk in the door every day who want to be working at a place that's aligned with them from a mission perspective. And it's a great way for early stage companies to compete for talent against larger, mostly public, incredibly well-funded companies that are paying huge amounts for engineers and developers in particular. So that's a thing that I think we're going to see more and more of. I probably worked with 2 or 3 public benefit corporations 3 years ago, and now it's probably 20, with more of those conversations happening every day with founders and early stage companies. So that's a big one for me.
Excellent. Peter, thanks for joining us and sharing your insights and perspectives.
Thanks for having me. Anytime, Fabricio.
Thank you. Thank you, Cooley, for making this conversation possible. Kia, now over to you.
And I'm Kia Kokalitcheva, a technology and business reporter for Axios. And our final guest today is the head of ventures and gaming at FTX, Amy Wu, who's joining us from Chicago, Illinois. Amy, welcome.
Thanks for having me on.
Thanks for being here. Okay, so you just joined to lead a $2 billion fund at FTX, which is now like one of many of like roughly about that size in the market. So you got all this money sloshing around, chasing crypto and Web3 deals. But at the same time, we're still seeing a lot of skepticism, even from like technologists out in the industry. And they're really worried about things like Ponzi schemes and are not buying into a lot of this like democracy rhetoric that we're hearing in terms of the business models. So what do you say to that?
I say that honestly, some of the concerns are accurate, and I think that the industry of crypto and Web3 are still very early. So some of the stats are that there's, a few hundred people that have probably traded crypto in the world, a few hundred million in the world. And then, on the order of 10 million people that have actually engaged in non-custodial wallets and trading in DeFi. And then let's say like a couple million people at this point probably who have bought an NFT, maybe fewer. And so we are still super early in the space. There's a few things going on. I would say that if you look at where is the space going, you do have the overlay of the regulatory landscape, which I think there's a lot of eyes on Washington right now, and the impact it would have on both tokens, what's deemed securities, what's going on with stable coins, et cetera. And a lot of other jurisdictions look towards the US for guidance on their jurisdictions, obviously separate as well. And so this is like one of the biggest topics going on in crypto that may impact the market from a short to medium term. But if you look at a longer term perspective, which is what we look at from ventures and VC, it's hard to imagine that the space is going away. It has really, whether it's an NFT or just digital assets or tokens, it's really captured the imagination of a lot of different industries in smart contract technology. And that spans from Web3, which a lot of people equate to consumer tech, whether it's gaming, social networks, consumer brands with the NFT brands that are being created, to infrastructure, security, data, and then also emerging industries like carbon credits and energy and healthcare has really captured the imagination of people. And this year, we're both seeing top tier talent actually start going into the crypto industry, and we're still at the beginning of that. And I think that is an accelerating force. And also just actual use cases, real use cases for crypto and smart contracts beyond just trading crypto. And so that's why, we're super bullish on the space. Yes, there's a lot of capital going into crypto. It's probably more capital right now than there are, I would say, high quality projects. It's competitive space. And so we're really careful around which teams we want to back. And we really need to demonstrate a lot of value in order to win, being the privilege of working with these teams, because they have a lot of funding options right now. But that's where we see the market.
Okay. So the concerns are valid, but you have hope that a lot of this will clear itself out over time. So tell me, what are some areas that you guys are looking to invest in? And I know you probably don't want to give away your secret sauce to competitors, but what are the main areas you see the most promise in as far as investing?
Yeah. I'm happy to share. We're actually quite collaborative. We co-invest with our with investors all the time, and I think the areas that we're excited about is pretty much like what a lot of people are. And I mentioned some of them. Web3 is certainly a great area, and super interested, because it turns out that I think last year there would have been few people even in crypto community that would have guessed that NFTs would be actually the most powerful onboarding engine for people, mainstream audience into crypto. But they have been. And not only just general people into crypto, but also people onboarding into their interactions with specific L1 and L2 blockchains. Really interestingly, I think DeFi summer obviously happened in 2020. And so I think people thought that DeFi was going to bring us in, and it will always be a large, an interesting large industry. But also we just think that consumer and NFTs and just the interest and appeal of the culture and products and brands that are created in that space is going to continue growing. And we're at the very beginning of that. So that's one area. And then also just it's difficult to build on the blockchain. And so you see this rise of infrastructure, technology, DevOps tooling, security being built on top of L1 and L2 blockchains. And this is super interesting area. Also data vendors, ways to, for a protocol team that's building a really interesting app to actually be able to use more parts, leverage other people's infrastructure in order to build quicker, and also so they can really focus on what they do best, which is reaching their end user. And so that is an area that we're spending a lot of time in and are super interested in.
Picks and shovels have always been a very popular area of investment. On the other side, what do you think are some areas that have been just totally overhyped? You're calling bull on that, like staying away from it. Everybody else can lose their money in that area, but not you.
I don't know about losing money, but I definitely think that there are way too many picks and shovels businesses in the NFT world right now. Like, there's just like dozens and dozens of quote unquote Shopify for NFTs. And I think I heard from somebody who's actually is like an infrastructure provider that there's 1,000 NFT marketplaces that have become their customers. And so I'm less interested in picks and shovels businesses in that space. I'm a lot more excited about projects that are either building a brand in the NFT world, or let's say they're like, for example, Shibuya, like, a deep utility led protocol, that community that's being built to help inspire, for example, like artists actually find better aligned incentives with the art that they create using smart contract technology. Like, that's like a lot more interesting in my perspective.
Mm-hmm. I'm definitely going to ask you about gaming, which is another area that you head up at FTX. But first, really quickly, there's been a lot of criticism around sort of the user experience and the user feel and design of a lot of these crypto and Web3 projects that are making them inaccessible to folks who aren't maybe the most like tech savvy or who aren't, technologists themselves. Like, how long do you think it's going to take for the market and the industry to really get to a space where these products are as user friendly as the era of the internet we've had so far?
I think in the next 12 to 18 months, we're going to see it. And absolutely, this is probably one of the bigger challenges that's slowing down the adoption in crypto and blockchain right now. If the user experience is that in order for me to even start interacting with a project, I need to go on crypto exchange, I need to buy a certain token, then I need to transfer that token to a non-custodial wallet, which I need to spin up and create. Then I need to figure out how to integrate that with the project and go through another series of steps in order to get the tokens onto that project and potentially stake it. And along the entire thing, maybe it takes a couple of days because the deposits or withdrawal process takes multiple days. This is just not. This is a user experience that's hard even for crypto native users, let alone mainstream users. And it just will not be what this space will look like within, let's call it like 18, 24 months period of time. If we're going to have mainstream apps that with tens of millions of users or millions of users that also, have elements of Web3 associated with it. So I'm personally, that's one of the main things I'm looking for, like in looking at Web3 investments.
Mm-hmm. And then in the last minute that we have, gaming, that's the other area that FTX recently got into, and you're heading that up. At the same time, we've seen a lot of resistance from the gaming industry and gamers themselves when it comes to crypto tokens or NFTs or anything that some of the gaming companies have announced. And a lot of it comes from a history of gaming companies sort of extracting a lot more money from players without really adding value to the fun of playing a game. How does that impact how you're looking at gaming?
Yeah, it impacts us a lot. I mean, we launched FTX Gaming. We want to be infrastructure providers for gaming companies that want to transition and move into Web3. Launched NFTs and tokens in a very compliant ecosystem. And of course, we're thinking about like, for better or for worse, gamers have associated NFTs with being bad. And so we are working with gaming companies to actually help them create great games so that the gamers are thinking about the game first. It's fun, it's entertaining, and they're also collecting items that they can own. And that is, I think, what's going to draw players into the space, not this promise of a future NFT drop, because they don't care about that. They care about, for the most part, they care about like, am I going to be entertained? Will I find fulfillment? Can I play with my friends? And so absolutely, that's front and center to how we also want to contribute and build in the space.
Makes sense. Well, let's see how that goes. Thank you so much, Amy, for being here with us today.
Kia, thanks so much for having me on.
Thank you all for joining this afternoon for another virtual conversation that has made everyone smarter faster. For more info or to sign up for the Axios Pro Rata newsletter, visit axios.com/newsletters or go to the Axios app. And stay tuned for our next installment of our Dealmaker series, where we'll continue to discuss the changing financial, regulatory, and cultural landscape for dealmakers, founders, and investors. And finally, to get the latest on deals across industries, sign up for Axios Pro at axios.com/pro. Thank you all for joining, and we'll see you at axios.com.